When you invest in a stock, you have to buy it because you think people are going to like it in the future. Now, as a proud Canadian, Wayne Gretzky was my hero growing up. He used to say he wasn't successful because he skated to where the puck is. Rather, he skated to where the puck is going to be. And so we have to have the foresight as well as investors to invest in companies that people are going to like. If you buy a stock that everybody already loves, then there's not that many incremental investors to push it higher. So what's an example of a catalyst? So if you invest in Take-Two, ticker TTWO, which makes Grand Theft Auto. If Grand Theft Auto comes out 6 months from now, GTA 6, whatever it is, and you buy the stock now, well, investors are going to like that stock because you have a catalyst, a reason to be there. Always skate to where the puck is going to be. Buy broken stocks, but not broken companies. What does that mean? Well, when you see a stock falling and it feels like catching a falling knife, the stock's going down. If the fundamentals are still good, that's when you roll up your sleeves and start doing research. Never invest in a company in a tiny market, okay? And there's this concept of total addressable market. And a great venture capital firm that I've partnered with in the past called Kleiner Perkins, usually they don't invest in companies that don't have a total addressable market, or TAM, of at least $20 billion. And the reason is, in the unlikely event that the company they invest in does well and gets 5% share of a $20 billion market, then that means that company has $1 billion in annual revenue. Okay, so remember that. Don't invest in companies that have tiny markets. Okay, let me give you an example. Okay, and let me give you a tough example because I know what you're thinking. You might be thinking, what about a company where the market doesn't exist yet? It does. You just have to think about it differently. For example, Uber. When Uber entered the taxi market, the online taxi market basically didn't exist. The total addressable market was zero. But the traditional offline taxi medallion market was massive. It was a massive total addressable market. So how do you find the TAM of a sector? Well, the way to find the total addressable market of a sector is you go to the top 5 or 6 companies in a sector, and you add up the revenue for those top 5 or 6 companies, and that's a good enough proxy for the size of the total addressable market. Or you can do a search for consulting reports that talk about the total addressable market, like McKinsey and Accenture, where I used to work.